Hi everyone. So I am also, based off my kind of inspiration to do one on NASDAQ and tech stocks, I'm also going to do one on the Dow. And so the Dow is, again, this is more for the benefit of newer traders, but the Dow, as far as I understand it, the index was created in 1896 by Charles Dow, and at the time was predominantly industrial at the time. So it was kind of planes, trains, automobiles type of shipping, and it was a good thermometer of the, I guess, of the economy at the time, because of course if customers were placing more orders, the economy was doing well, if there was an uptick there. And so it's got quite an interesting, got quite an interesting history. It's called Wall Street, just generally as a result of copyright issues. So on certain platforms, it'll just be called US 30 or Wall Street 30 or just Wall Street, for example. So looking at it here, and you can see quite a bit of history of it. It's actually amazing because really they only starts to see quite a bit of kind of real growth starting to occur around the late 90s. And you can see here, this is the result of the 2007-2009 global financial crisis. You can see how much growth we've kind of had there at the moment. And look at where we are at the moment. We've had quite a big correction in terms of that. We've kind of come back effectively almost to the pip to the price at which the market was, at which the index was when Trump came in as president. It's managed to kind of claw its way back up. It's back up above 24,000, and where it's going to go from here on is, I guess, is to be seen, because what's important to note so far is that this uptrend is finished. It's been broken, and now it's kind of a wait and see. We need to see the next kind of 12 to 20 candles to see if we then subsequently get a trend is then created. So we don't really yet know what the status of this is, but and I would note that it's kind of, in terms of the RSI, it's heading towards more bearish kind of territory. But at any rate, I'm going to be paying more attention to price action than I will be to the RSI. So just kind of establishing that. It's got a lot of history, and it has 30 constituents, generally speaking. It used to include General Electric, for example. And what amazes me, and this is just anecdotal, is that considering how much more electrical our society has become in terms of solar power, wind power, just that kind of thing with electric cars, I find it funny that General Electric completely missed the boat on that. And a good indication of that would be management. There's probably poor management in that, and the longer management is in charge, generally speaking, the more stuck they get in their ways, and they'll refuse to their head is in the sand, refusing to, but this is anecdotal, so that's not evidence-based, and that'll likely be it. So if I go now and have a look at Wall Street and go look through the constituents, okay, you'll see General Electric's been booted from that. So I just thought that was interesting. And actually, they've been downtrending for so long, so they're effectively losing value. What you will notice here is that there's a lot more amber and reds here than there are greens. And that is also indicative, I guess, of, first of all, the criteria, I guess, as to how something is then listed within the Dow, and also how it becomes a constituent, but also potentially that it's now a cross-section of different industries and different sectors, not all of which will thrive at the same time. Okay, so I guess in that respect, it makes it a slightly kind of better indicator of that. The S&P to me is still the best indicator. S&P is global. It's got 500 constituents of all different sectors, and therefore it's a much better cross-section of what the global economy is like, because of course they're around the world, and so they'll get a better sense of spending. So let's go through this. Okay, so if I just start off with a couple here and just kind of have a look at this. This is now officially in a downtrend. Okay, so that's a big issue now. It's definitely heading into bearish territory. It's becoming more bearish and weaker, implying that it's much more likely to head down now than it is to head up. Visa is beautiful. Again, Visa is absolutely a favorite of mine. Part of this is that not only is it very stable, but there's a lot of reasons why they're also cash rich, and so it's very, very stable here. And if I compare this, okay, so we'll go through these, but I'm going to compare this to a few that are, it amazes me how often, and again this is anecdotal, that people I know are big fans of certain stocks because of the name. They massively brag about how they've kind of managed to buy this particular stock at a price, and the performance when I look at it is just shockingly bad. It's not really my place to interfere with their purchase things, but I want to demonstrate a couple here. So Visa's great. I'm a big fan of that. Microsoft, I looked at in the NASDAQ video, which is listed, so you can see that. And although this is being recorded right after, I don't think I'm going to post it. I don't want to bombard people with content, so I'll post it tomorrow. So in other words, I'll post this on Thursday, but it's being recorded on Wednesday. Microsoft's great. Okay, I'm just looking at that curve. It's starting to become into a bit of an area here where I'd like it to kind of come back down. I would say that at its most aggressive, it would probably come down to about 15,000, but I would actually expect it to probably pull back a little bit lower, a little bit higher, bigger pardon. It's got a pretty stable retracement. It's already pulled back, had a bit of a correction and heading back up. So anywhere back down towards 17,500 seems more reasonable to me. Intel, fine. It's, you know, these are fine, but I'm trying to select, if I had to choose the best of the best, this would be the way in which I would kind of do that. Apple, there's one, Apple here is amber. Okay, part of the reason that it's amber is because it's gone parabolic. So what does that mean? Well, parabolic is the angle at which price action is going here. It has, it's become incredibly overpriced. Now, we don't necessarily see it, relatively speaking, on a monthly basis. But if I shift this up and go to, say, a quarterly basis, you can see that this is the kind of distance it goes away before a bit of a correction. It's definitely gone further away, so we're in that territory now. If I go to, let's just say, a yearly basis, you can see that it's very, very far away from the moving averages. Okay, so what does this imply? Well, yearly basis, each one of these candles is a year. This is 2020 so far. It does just implies that in the next 5 years, call it, we're certainly due for a correction, and that correction would bring it back down to, say, 20,000 to 25,000 is reasonable, I think, to do that. So that's fine. But we are absolutely, the angle of this is becoming unsustainable. And so if we get a strong rejection on this level, there's a couple of different ways that can unfold. That 20 to 25,000 area puts it over here. And that is not a bad thing, by the way. It's never really as dire as it looks when we look at it on a much longer period, but it puts it kind of in this area here. So if it does want to come down and test this level here, 22,500, and find support there, that's acceptable. I suspect it might find that it is potentially unable to get past this level. We'll see. The point is it's already overextended. Okay, on a much longer term basis, it's overextended, it's overpriced. It's basically overpriced, and it needs to come back down towards 25,000. And so one of the ways in which it could do that is it could effectively just find that it cannot get past this price point over here, and therefore that it sits this way for, I don't know, a couple of years. If that happens for the next 2 to 5 years, or maybe even just less than that, maybe just the next kind of 18 to 36 months, and then eventually breaks up. And in doing so, it will maintain its value, fair value for the market, and it will kind of achieve that fair value, and then it'll go head up from there. And then what will happen is the angle of the curve will calm down a bit, and then it can pick up that pace again. But this is effectively unsustainable. This is heading into bubble territory. So if I owned stock, and again, this is just market discourse, if I owned Apple, I would simply accept that over the next, anywhere from next 2 to 10 years, that this is likely to be a potentially rough area that we're going to be in. And I could either choose to take my cash out to reduce my exposure, or just decide to ride it through. All right, so if I don't need the cash, I could just have it sit there. Dividends can be very good, and so obviously there's, if you're familiar with value investing as well, dividends is often another excuse. If you don't need the cash, and the dividends can actually be quite pleasurable. Okay, so let's move on to, I want to talk about some of the big problems. Okay, so Boeing. All right, so Boeing has lost most of its value. Now, we could kind of understand this. Interesting, because historically they have a reputation for doing stock buybacks, and as we know, if anyone travels here, most people do, airlines have been cutting costs. So they complain about price issues, competitiveness, and we know that's a real problem. But at the same time, there's a lot of stock buybacks occurring at a corporate and exec level. And so the whole system potentially needs to be reset. And if you look at the number of planes, there are just hundreds of thousands of planes in the air at all times. It's I don't know if this is true, but there's an urban kind of myth, or it sounds like an urban myth, that you almost couldn't have all the planes landed or grounded at the same time. There just wouldn't be enough space for them. I don't know, but that's an interesting idea. So I'm just talking about this because it's lost so much of its value. And you could tie this obviously directly to quarantining, the inability to travel. What this does tell me, it's quite interesting, is if you had said kind of back here, for example, that price would find its all the way down here, you would really be going, well, how could that possibly happen? Now this is the beauty of something like this happening, is it's widened. It's a black swan event. It's not completely a black swan event. We knew, if you look back 10, 15 years ago, we knew that pandemics would be, we know they are going to be a risk in our future. They are a very real threat. And there's going to be ongoing ones. This is not going to be the first time in our lifetime that this is going to happen. Okay, so because of our dense population, the biggest threat aside from global warming and Donald Trump is going to be, and I'm not joking by the way, and is going to be obviously the threat of a pandemic. Okay, that's a separate discussion, but I wanted to highlight this. So to me, this is not a cheap buy at all. If anything, this has exposed a strong weakness here, and it's actually entering bearish territory. So if anything, it's actually weaker now. It's not a buying opportunity. It depends. I guess if you've got so much cash and you're in your 30s and you don't care about waiting for the next if you don't care about waiting for the next 10 to 15 years, absolutely, then it's a different approach. But as somebody who's maybe expecting to get growth in the next few years, I'm not entirely convinced. And of course, the Democrats in the US are really very much trying to introduce regulation that would prevent stock buybacks in the bigger corporations. They're trying to make sure that money, if they are able to do it, that money is distributed lower down the chain rather than higher up the chain, which has produced the massive inequality gaps that we are currently kind of experiencing globally as well. And this all hinges effectively on Donald Trump being re-elected. And he has made no bones about it, and the GOP have made no bones about the fact that they are willing to corrupt the system to stay in power. So this is very interesting. Historically, we're at that kind of fork in the road as to whether is it outside of the realm of craziness that we are seeing a Stalin or a Hitler in at the early stages. Is that completely the case, or will the Americans manage to pull themselves back from the cliff edge and manage to recover? But I can say this, that if the Democrats get back in power, if they oust Trump, there is going to be massive retribution for that. Trump will no doubt probably spend the rest of his days in prison, and they will be arresting a lot of Republicans and unearthing a massive amount of corruption at the highest level. So massive amounts of wealth corruption. So I think that would be better for everybody if that is the case, especially being able to recoup some of the money that has gone towards the upper echelons and redistributing it, and introducing healthcare and stuff like that. So ironically, the very people that support Trump actually would benefit more from Democrats being in power. So that's just an interesting but observable kind of fact. So I wanted to mention this because it's kind of lost its value here, and that's interesting. And then moving on to Verizon, it's the spikiness here and the kind of general lackluster growth. There's no real value here. Okay, so you can see how all of these, there only being 30 constituents, you can see that they can impact the overall performance. But nevertheless, Dow has done pretty well, but also that it's because it includes things like Apple and Microsoft. Moving on, Walmart. Walmart is similar to Costco in terms of its appeal, I guess, and it's the kind of the products and it's kind of its I guess its offerings to the general population. But it is not looking as strong as Costco. This is looking pretty weak. You can see here that actually we've kind of got a series of higher highs here, and we're actually producing lower highs here. And so the implication being that this is becoming weaker and weaker and weaker, and is unlikely to be able to sustain that. So my expectation is that Walmart is going to kind of fall down a bit on that in the coming months. Then going through to IBM, and IBM, again, comparing Microsoft to IBM, there's no value here. There really is not. If I owned IBM shares, I would just be, I guess I'd be getting rid of them in favor of other stuff that has potential to grow. But IBM has got nothing. It's got no future at this point in time. And it really hasn't displayed much value for a while. So I'm sad to say it, but that is the case. ExxonMobil, for various reasons, you can see they're just unable to get past a certain price point, and they've come down. They've managed to find some support here. But it's very much a downtrend and has been kind of effectively downtrending since 2014. And is bearish. If anything, it'll head back up. Its best days are probably behind it at this point in time. It'll head back up to 6,000 and then probably start to head low. And that would be kind of, I guess, a good news scenario. So that is looking more bearish than bullish. Walt Disney. Okay, so let's talk about Walt Disney, because they've now introduced their subscription service, and they have some real gems on there. And they have a lot of power, a lot of influence, but that doesn't actually guarantee anything. And so we'll have to see what happens, because you can see here that I'll kind of back down towards their 11,000, call it 500 resistance level. Let's go. You see, if I want clarity on this, I'll go up a little bit. So if I go to the quarterly, I can get a sense of what's going on here. They took quite a bit of a knock, obviously, recently, and so with a streaming service, well, actually, probably the knock most likely, and again, I could be wrong here, most likely came from quarantining and then access to the parks. And that just, if that is the case, that indicates how much of their income can kind of take a hit from that. And again, I don't actually know that for a fact, so that's more of just more of a kind of anecdotal observation. This is quite cool. So I quite like the fact that they have come back. They've now connected with the moving averages 10,000 and starting to climb back up from that. So what that means to me is that on a much longer term basis, they're now operating closer to true value from here. They've got some strong resistance at 15,000. But they at least now have connected with true value and are recovering from that. So although they could still be incredibly choppy, I feel that they've now managed to reset the angle of their curve, unlike Apple. So you can see here that it started to get steeper, and then it's kind of flattened out and it's curving here a bit. So overall, the angle of it has changed, and therefore it implies that over the coming years, as we head in towards 2026, towards 2030, they have that ability to maintain an angle that's kind of going to be closer to this. But it also means that if that is the case, if I'm reading the angle correctly, they're only potentially going to get back up towards this, towards 2024, if that's going to be the case. And so they might have to rebuild the business and rejig it. Because if the quarantining carries on, businesses that depend on people attending physical locations is going to change. The rides and so on and so forth. And as you know, if you've ever been to one of the Disneylands, I recently went for the first time in the last year, and it is absolutely fantastic. And everybody says you're going to enjoy it, and you really do. But this is now looking, at least for the near future, is not looking super, super strong. Okay, Coca-Cola. So Coca-Cola is one of Warren Buffett's favorites. They also own pretty much as possible in terms of consumables, and they've had a nice, decent correction. That's a good sign. They're leaning towards kind of more bearish territory, so I don't really expect them to recover too much from this, but I just wanted to show you. So this is an old faithful. It's got a lot of history. In fact, and most people don't always know this, a big chunk of Warren Buffett's wealth and success from his Coca-Cola shares came because he bought them in the 70s and 80s, and not so much necessarily because of recent times. But because it's a consumable, you can see there was a patch here during the late 90s, where for whatever reason they headed lower. They started to recover from that. They're probably, again, more likely to potentially stay where they kind of are around this area. But it's not the best one that I've seen. There are better options out there. Here's a great one. So Goldman Sachs is one of the ones that I mentioned that seems to be very popular as a brand name. But it's actually junk. It's a junk stock. I'm sorry. It's a very controversial and opinionated thing to say. I get that. But it is junk. If you look at it, if you compare it to so many of the other stuff we've seen, it's just a crappy performer. There's really not much to be said for it. It had most of its really great performance in the run up, I guess, to the global financial crisis, and it's kind of been all over the place since then. And actually, it's still producing lower highs here. It's kind of sitting at its support level. If it breaks below that, it's likely to head lower down. So Goldman Sachs, to me, is a complete junk stock at this point in time. I really don't. What I would need to see to change my opinion is I'd need to see a stable uptrend, kind of this kind of behavior start to reintroduce itself. If I saw that happening, even if it was down here, if it was still below 20,000, stability returning to it would be a good indicator. But as it is now, this for me would just be not a sell. In other words, I wouldn't short it. It's not a stock that I would sell, but I certainly wouldn't want to own any shares in it. It's one of the worst ones on this, and anyway. And so no, it's not it's a junk stock. Home Depot. Okay, Home Depot sits within the Walmart and Costco kind of category. You can see they've recovered very, very well. I am noting the general downward trend here. Okay, so the general downward trend here often implies that it's kind of not as strong as it seems, and they might find that they have some strong resistance up here. But what I would say is that at this point in time, they're potentially, again, likely to stay within this range in terms of value. And so I like them for that. Then having a look at McDonald's. So McDonald's is a massive consumer bull. What I would absolutely note here, of course, is that strong downward trend. It's heading very close to bear territory. The implication being that if it isn't really able to recover much beyond this level here, which puts us at, I want to say, I've got to stick it at 19,000. If it can't really get past 19,000, it's potentially likely to head lower down. So we might actually find that McDonald's, a lot of this, what worries me about this is a lot of these are showing this potential for lackluster performance in the coming years. And the only way that is likely to happen is if, I'm guessing we have global economic financial hardships for the next few years, which is kind of a bit, I'm observing this now. It's a little bit concerning because a lot of these are showing that they are kind of a lot of the RSI is indicating they're heading into more they're only just getting into negative territory. So I'm more optimistic than that generally by nature, and I would like to think that these are either going to stay where they are or continue to climb. But this is showing a bit of decline, at least in terms of momentum, as a momentum indicator. So that's going to be interesting to keep an eye on. McDonald's is a consumer, you know what I mean? It's got a massive consumer base. People, obviously, it's a consumable. They produce consumables, so people should in theory, if their price point is right, people should continue. But if they can't get out, if they can't go to McDonald's, they might have to change their business structure. And then I jump across to Nike. Nike is last on my list. Okay, so Nike is a decent performer. They've had a decent correction. They've pulled into the previous highs over here. They've had a decent correction. If I go and have a look at this on, say, a quarterly basis, that's very nice. They're still sitting roughly within some good value at this point in time, and going back to that monthly basis. So even though there's kind of some erratic behavior here, it's relatively healthy by comparison. And not looking to bearish at any point there. So again, Nike looking pretty good, and I guess that could also be as a result of people kind of exercising a bit more now that their lifestyles have shifted the balance of it. So that's the last one on my list. I'm sorry I've rambled on for 22 minutes. I'm going to wrap this up now, but I just thought that these were worth discussing. Again, please feel free to comment, good or bad, in the comment section and give me your thoughts. I'm interested in your opinions on a lot of these. I'm just observing the trends, the visual trends, which will show obviously the behavior, the general inclination of where these are going in terms of their performance. But that's it. And so I will wrap this up, and then maybe what I'll do is even have a look at some of the S&P ones as well, because I'm quite enjoying this.